The levels that we talked about in yesterday's video were actioned, and we've seen a huge increase inside the crypto market, primarily because literally $951 million worth of shorts was wiped out. When a short gets wiped out, it has to buy to cover. Buying to cover puts upward price momentum into the market. In this video, I'm going to give you some insights into what levels you need to look at for the crypto market, and we're also going to look into the stock market, major indexes. It's going to be awesome, and you're going to get knowledge that you won't find anywhere else. Let's run the numbers. The crypto market is taking off. There's been $850 million worth of short liquidations, and this has pushed the price of the crypto market way up. A single position was liquidated for a mere $88.55 million. Ouch. And across the board, 179,451 positions were liquidated. In yesterday's video, we were looking at the main areas that we needed to see positive price momentum across to confirm a positive continuation of this uptrend, and that was around that 111,300 mark. It got pretty wavy. It got very close to just losing it, getting it, losing it, losing it, getting it, until the US session started to kick in, and boy oh boy have we done well. Bitcoin is currently trading at 116,343. Before we look into the structural levels, we'll have a look at total crypto market cap. The level to look at in total crypto market cap from yesterday's video was that 3.42 trillion. If we managed to get above that 3.42, we were going to do very well. And we got above it. And how? Mainly because the shorts were liquidated 10 to 1 when compared to the longs. Currently, the entire crypto market is worth $3.56 trillion. If you've ever wondered why we get these God candles, or conversely, why we get hell candles, a lot of it has to do with derivatives. We can see that we're just nearly up, well, north of $900 million worth of short liquidations. Total 24-hour rect is over $1 billion. And looking at the Bitcoin liquidation heat map, what are we seeing here? We came through all of these liquidation levels. They're worth $1 billion. And you can also see we're starting to run out of them. We know that Bitcoin and the stock market tend to follow each other from a directional basis. So what do we see when we look at the stock market? Is the stock market rallying to new all-time highs? Not exactly. Actually, it's going the other way. Over the past couple of sessions, looking at the S&P 500, we've found this overhead structural resistance around that 62.87 mark. It's not doing exactly what Bitcoin is doing at the current time. And what about the Nasdaq? When we look at the Nasdaq around that 20,600 mark, that's the area of structure we need to keep our eye on. We can see that the major stock market indexes are not exploding, and the Dow Jones has come back to retest the 44,650 level of structural support. If it manages to get above, it's going higher, but there's a negative CTKS gap below, so be aware. And how's the Russell been going? Russell has come up to that 2279 area of structural resistance, and it's backed off. Let's just do a quick overlay of Bitcoin with the major market indexes. We can see Bitcoin is starting to take off. That pretty much the directional movement is being reflected through the major market indexes. If Bitcoin is giving a risk-on indicator, and it definitely is doing that, we can expect the major market indexes to go a little bit nuts in the next trading session. In yesterday's video, we were talking about Bitcoin. It needed to get above this 111,200 level. It was an incredibly important level, and we saw structure be adhered to throughout the entirety of yesterday's session. And when we managed to get above that key level, we started to go. And boy, oh boy, did we start to go. This purple line is the previous month's all-time high. We absolutely blasted through it like hell. Now, when we came to this positive CTKS gap, we can see that we had a bit of turbulence around here. I need to explain that to you by looking at total crypto market cap. So let's do the same kind of analysis. Total crypto market cap and Bitcoin move together, so it's very important to understand how one impacts the other. And you might say, Ken, I don't really care. I'm in Solana or Doge or XRP or ADA or whatever crypto you're in. It really matters because total crypto market cap and Bitcoin control your alt. Yesterday's video, we were talking about that $3.42 trillion level, and I was explaining if we can get above there, things could get really, really interesting. And true to form, what happened? We came up. Now remember, Bitcoin started to waver around these areas. Why did it waver? We know in advance, because of total crypto market cap's structure. Now, why does that make any difference at all? Well, this is the entire crypto market cap coming into overhead structural resistance, and we know where it is ahead of time. And you can see it's done a similar thing. It's got above that top side resistance and it's just blown up in a huge way. Now, we can also see that around that $3.54 trillion mark, there were a lot of sellers playing in here. Now, what does that mean? It means that those sellers will arc price over, and it's already started. Coming back into retesting this area would be very, very healthy for price. And again, we know ahead of time where the key levels are. Now, how does this play into Bitcoin structure? So when we go back to Bitcoin, we know this was all total crypto market cap hitting overhead structure. So if you were trading, for example, or investing in Solana or XRP, Doge, ADA, it doesn't matter what it was, you would see the same kind of fingerprint playing out. Now, this God candle that we saw, boy oh boy, was it a ripper. What was it in precise terms? It was hundreds, $900 million worth of shorts getting wiped out. Now we can see a bit of an arcing across, because as we come through structural level after structural level after structural level, the sellers get heavier and heavier, and that causes this arcing. Well, it's known as a sell arc inside the masterclass. Now, does this mean this is all it can do? No, not at all. Because we have positive momentum and we're going to have a lot of people YOLOing into the crypto market. Remember, Bitcoin is above its all-time high, but that doesn't mean it doesn't have structural resistance overhead. This is a retail myth perpetrated by people who just do not know how to read charts correctly. What we can see around this 118,000, that's the level we need to keep our eye on. If you've been professionally trained for inside the CTKS method, you already know that the key area that you need to watch is around 115,500. Why is that? Because all of this overhead structure, you've got 1,000 million people just YOLOing in. You only live once, buy the green. It's a God candle. We're all going to heaven. It's your potential account that's going to heaven if you just jump in on green fire. Please be aware. You have to be less reactive, more considered, less emotional, because those emotions will burn you. What these big green candles signify to retail is massive amounts of certainty. And that certainty, it just does feel fantastic, absolutely. But it also represents $1 billion worth of liquidations. The key is, what is your plan? When you look at price like this, are you anticipating a pullback? A pullback to where exactly? If it retraced this entire move, would you be prepared for that? If you think about what professionals do, they are always thinking in terms of three dimensions: the upside, the neutral side or consolidation side, and the downside. Out of those three areas, only the downside matters. Why does the downside matter? Well, if you have an account worth $88.55 million, and you get liquidated, guess what? No more account. And if we think about this, Bitcoin had liquidations of 451.22 million in the last hour. Look at that. It's all occurred literally after the close of the US session. That's a lot of liquidations. The shorts came into the market because they felt absolutely certain that the price would go down. This is the problem with having a one-dimensional thought on where a price wave can go. Now, what am I talking about, a price wave? Prices are always moving up and down. Why do they move up? Because we've overcome structural overhead resistance and we've hit the next one. Why does it move down? Because that structural overhead resistance is too strong. Price needs to consolidate and reflect at lower levels of structure. This kind of wave-based price can cause people to blow up their accounts without even blinking. Understanding where structure is inside your chart is incredibly important. For example, inside Solana, we saw around that 156.40 level, there was a ton of structural support. And that was useful because the markets were coming into structural support at that time as well. The key level on Solana to watch was that 160. We came up through it, did the really great candle, which pulled a lot of retail in. They got faded, but we got above the 160 mark because Bitcoin and total crypto market cap had power. And now we can see at around that 164.25 mark, we can see exactly what Bitcoin and total crypto market cap are doing. Note the structural resistance around 162.25 for Solana. Please let me know in the comments what particular cryptos or what other charts are you trading with structure. And I'll seek to bring these out in future videos. When trading or investing, one of the hardest things to do is to unwire the green means buy and the red means sell mentality. Typically, when the markets go green, the financial press has to print something about why it went green. Most of the time they have no clue at all, so they just make something up. And they have a veritable treasure trove of things to talk about when it goes red. And of course, how do you sell any particular thing inside the media? Well, if it leads, it's been bleeding. Unfortunately, that's no way to actually trade and invest, because if you're buying purely on green and selling purely on red, all those news and signals will have you consistently unprofitable. And this is the reason why most people don't make money out of markets. They're emotionally manipulated. Instead, when you become independent from the news and from signals, you just look at structural support and structural resistance, and you already know what you need to know. You look across the markets through intercorrelation and interdependence. You have your three-way thinking on at all times. No, not that three-way thinking. The idea the price can go up, can go flat, or can go down. I would like to do some more mindset videos for you. I think it would be really helpful, but you need to let me know what kind of topics you want me to cover on a day-to-day basis, so please do so in the comments. Always remember, price is always moving in a wave. The markets are unlimited opportunity machines. You never miss out. And you're not in this for a day. If you didn't bought and you feel you should have bought, don't worry about those things. This is all part of becoming professional. Just give up what didn't happen and focus on creating the wealth that you need to create. And the only way to do that is through knowledge. And if you'd like to pick up the indicators that I go through, they are available at ctksmethod.org. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.